Hey everyone, welcome to a brand new episode of Show Me the Crypto. This episode, we chat with Rachel Lynn, who is the CEO and co-founder of SynFutures. Ulf, what did you think of this episode?
Oh, it was great. Rachel's got a really interesting background coming from traditional finance and moving from CeFi into DeFi and her love for crypto and how that all came about. But from there, we talk about derivatives trading, and she does a great job explaining what that is, how it works, how SynFutures works, which is a derivatives trading platform that's fully decentralized and on-chain. And they built some really cool tech there, which she does a great job breaking down. So all of that was the highlights for me.
Yeah, what I appreciated is I didn't have a ton of knowledge coming into this interview about this space, but it was easy for me to follow along and understand because Rachel does a great job explaining it. Toward the end of the conversation, she talks about potential bull run trends that we should keep an eye out for, and her Bitcoin price prediction, her 10-year Bitcoin price prediction, one of the most thought out answers we've heard to date. You're going to love this episode.
Show me the crypto. Show me the crypto. Show me the crypto.
In a world on the brink of disruption, two men will bring you clarity by interviewing some of the most intelligent and influential names in the blockchain world. Welcome to Show Me the Crypto with your hosts, Wade Patterson and Ulf Lonergan.
Well, hi there, and welcome to Show Me the Crypto. My name is Wade Patterson.
And I'm Ulf Lonergan.
We're a couple of friends from Canada who love learning about cryptocurrencies and blockchain technology, and we're happy you're along for the ride. Whether you're a crypto virgin or you know your way around the block, we hope our interviews with some of the most intelligent and influential people in the blockchain space help deliver you with value. And on this episode, we're joined by Rachel Lynn, co-founder and CEO of SynFutures. With a career that has spanned from traditional finance to fintech to CeFi to DeFi, Rachel began her journey with Deutsche Bank's global markets division, specializing in derivatives. In 2020, Rachel co-founded SynFutures, which is a decentralized platform that aims to make crypto derivatives more accessible by allowing permissionless listing and trading of future contracts on any assets. Rachel, welcome to Show Me the Crypto.
Thank you. Thanks for having me.
Yeah, we're excited about this conversation. And I want to start on something I heard you say on another podcast episode, because you were talking about the fact that initially the financial services industry had a certain glamour or appeal to it, but eventually you almost felt a level of emptiness. So I'm curious, when specifically did you have that feeling, and how did that then lead to the next steps in your career journey?
Sure. I think like two part. One is that, like as a new learner at that time, you feel like the learning curve is steep, but after a while, in a large organizations, most of the people there feel that like they're just one part of a very huge organization, right? So you were asked to have the repeating words you are doing, and then they become a routine. That's number one in terms of the daily jobs. And the second part, and the more profound part, is that I was specialized at very complex derivative at that time. And many times I felt that we shouldn't be doing these types of product with our clients. It's so complex. This means nothing, and then and all the banks make products so complicated just so as for all the not just right, but I mean the main purpose is definitely for the clients to survive a few disease and not understanding what it is, so that they could charge higher premiums on the clients. And I feel like wow, I kept doing all of this stuff. Yeah. So there's a level of emptiness on like, how am I doing any goods for like human societies or our clients or everything? Yeah. So that's the part when I started to think about switching my career. Yeah.
And so when did crypto land on your radar, and what were your initial impressions?
Initially, I entered the industry fintech, so offering small transactions to SMEs and retails, which feels like more talk about interesting. While when I was with one of the large fintech companies, I got the chance to lead the first versions of blockchains platforms, enabling cross-border remittance to some of the Southeast Asia countries. We built a blockchain from the platform from scratch. And that's when I started to learn all the blockchain technologies, and I was immediately attracted to it. So that was amazing, especially after you know about the systems in traditional finance and fintechs. And it immediately hit me as, wow, this is the futures. Yeah.
And then you went on to co-found Matrixport in 2019 and SynFutures in 2020. Of course, the majority of this conversation will be talking about SynFutures. But first off, can you just kind of explain to me what was Matrixport and what led you to co-found that?
Sure. Matrixport is right now also one of the largest Asia crypto neobanks. So it offers a variety of services, including like trading, lending, wealth management, to sort of like custody. So it's a one-stop financial solutions to the users, especially in Asia. And I was first asked to sort of join their prior company called Bitman, which was at that time the highest largest blockchain company in the world, producing I think 80%, 90% of the world's Bitcoin mining machine. And Matrixport was part of the financial arms. So I was attracted to the visions about building a crypto, sort of next generation crypto financial platforms. And it was kind of interesting as well, the experience there, although that due to lots of different circumstances, it is focusing right now also in CeFi. While my interest is always in decentralized finance space. So that's the reason that I started SynFutures instead. Yeah.
This is kind of a different question, but what advice do you have for entrepreneurs? So you're somebody who, you had what I would assume is a pretty comfortable job in traditional finance, and then you take these risks and you branch out, as we said, talking about joining CeFi and then DeFi, but also as an entrepreneur. So if there's somebody listening or watching this episode who maybe they have that urge or that want to try to be an entrepreneur in crypto, what advice would you have for that individual?
With the conditions being mature, just try it. People at that time, especially my first move, right, from the sort of high-end traditional investment banking to a fintech company, I took I think 70% pay cut to join the company, and it did take me, a few days to consider the offer, but everything turned out to be perfect. I think one thing is that if you believe in it, you should go and try it. And there's nothing much to lose if you consider that the experience itself could add into your resume anyhow, right? So for lots of traditional investment banker, that's number one. And secondly, I think we should always aim at whatever we like, whatever the future's leading to, instead of sitting there with the knowledge that this particular industry that you're in is thinking. And then if you look back and from today on, yes, the investment banker at that times right now suffering a lot, especially in Asia, right? And because the industry overall is shrinking as well. So just do it and just try. And then if you're not 100% sure, then try in your spare time to join a crypto projects, be their ambassadors, and try how to farm and job, right? And see how this work is and what could really astute the sort of like the impulse and the goods in you. Yeah.
Now we're going to get into everything SynFutures, but before we dive into the platform, we have a wide ranging audience. Wade and I chat about all kinds of things in the crypto space, and not everyone is a trader or is familiar with trading. So can you just break down at more of a fundamental level? What is derivatives trading?
Sure. I'll answer this question two part. From the definition of derivatives, it's a kind of financial instruments that derive from other underlying assets. This could be complicated, but if we put into the right now popular derivative instruments, say there are two major categories. One is the futures. So futures, say if you trade on a stock futures, it means that you have the right and obligations to say purchase the Apple stock in 1 week. So this is a futures at what price? You have the right and the obligations to purchase a Apple stock at a price in a certain period of time. So this is called a futures. And the other major category is options. Option means that you have the right, but not the obligations to purchase this stock in a certain period of time. So this is a simplified versions of the explanation. So one is that you are going to do this in a certain period of time, and the other is you can do this in a certain period of time. This is called options. Yeah.
So with that in mind, what exactly is SynFutures, and why are things like decentralized and permissionless important when we think about derivatives trading?
Sure. SynFutures is a decentralized derivative platform. And the major instrument we trade is the first category that I just now mentioned as futures. And we call ourselves the Amazon of derivative, in that we kind of democratize the market by enabling anyone to trade at least any asset pairs within just a few clicks. For examples, you could trade a pair, say, the price of your microphone versus USDC. By simply providing an USDC into our platform, and then the whole platform will help you take care of the rest of everything. So list the pairs, help you call the price, help you settle, help you calculate your P&Ls, everything. We call it less Amazon because that we traditionally already products that you are trading was determined by all those large Wall Street banks. But right now, you yourself can list whatever asset you like in our platform, as long as there is a price feed. Yeah.
Now you say whatever asset, but this is, it's built for people to trade all kinds of crypto assets. And as I understand, one of the unique features that I saw is that anybody can come in and add any asset to the platform to then trade with. My question, that's one of the clear, let's say, advantages that I could see when I looked at it. But what are some of the other major advantages or disadvantages to, a decentralized trading platform like SynFutures versus, say, the more traditional exchange or trading platform for derivatives?
Yeah, I'll start with the disadvantage first. The disclaimer. Firstly, UX today is really poor in decentralized finance. It was similar to the early days of, Amazon, where you have to learn about how to do all those seed phase, and then you have to click, and wait until the transaction gets through or not, right? So, I think perhaps the most disadvantage today in DeFi, decentralized finance, is that the liquidity is not as good as in centralized finance, which means that if you are going to buy, say, like $1 billion worth of Apple stock, for example, like the slippage or the cost will be very high because not so many people are supplying debts on chain. So that's the disadvantage. But the advantage is clear. First of all, as I said, that this is a permissionless world. It's more like Amazon's. The fact that we enable these asset listings power to the users, that you could find more varieties of assets and more varieties of goods. And the second part is definitely transparency. I think the major problem with traditional finance is opaqueness. As I mentioned, that the bank will charge you huge spreads and you don't know what it is. And some of the other centralized platform in crypto, for example, FTX, they would use your funds to invest into shitcoins or other buying house and other purposes without your notice, right? So this creates a lot of risks to the users. But in DeFi, everything is transparent. You know exactly where your funds going to and exactly how much P&L you're going to get. And I think that thirdly, and one of the most exciting parts, is that the whole DeFi is open and as one integrated services for you. It was like when you hold this key and hold this account, you could go to every institution in the world. So you hold this account, you use JP Morgan's wealth management product, use Goldman Sachs' M&A services, you use whatever Citibank's deposit account, right? This is you could move your fund everywhere, and then with your spare fund, you could go and play a video games and pay for anything. So in DeFi, this is the same. With one set of private key, your own assets, you could just freely move to any services in the blockchains, and everything's open for you. Everything is there ready for you. Yeah.
SynFutures has evolved over the years. So there was a version 1, a version 2, and then my understanding earlier this year, version 3 was launched. Can you talk a little bit about each of those versions and what the upgrades were?
Sure. For version 1, we features our innovation on the permissionless listing for derivative, as I mentioned, because derivative is kind of complicated. So when we first launched, there was no one in the market who were able to offer that complicated model for users. So version 1 and version 2 is an improvement on the efficiencies, UX, etc. And version 3 is also a major version of the upgrade which we introduced to industry's first ever what we call OAM model. Basically, it means that we will be able to offer the best of both decentralized finance, permissionless listing, and the centralized finance order book, capital efficiency level. So, until today, no any other protocol were able to offer a fully on-chain order book in the DeFi space. So we were able to combine, say, a high capital efficiency model and this DeFi's permissionless model into one and offer the best of two worlds to users.
I know Ulf has been exploring with the platform a little more than myself, but when I went in there, I don't think it was open to Canada. Is that true? I was on the V3 website, I believe, and I tried to access, and it said there's a few countries such as the US, the UK. So is SynFutures only available to certain countries in the world?
Yeah. That was the advice from our legal counsel. So although there's no concrete regulation in DeFi derivative today, we did respect highly the compliance and legal rules available. So when I hired the best lawyer, also ex-EC or ex-CFTC and all those large firms in the world to advise what is the best practice. One of which is definitely not to offer the services to all those jurisdictions that's prohibited. Yeah. Sorry about that.
No, it's interesting subject in itself because when we look at using the platform, like, does it act just like any other crypto, or let's say most crypto DeFi apps that you essentially just connect your wallet to? You don't need like a proper an account. Is there a KYC process here, or is it just connect your wallet, deposit funds, and start trading?
Yeah, in DeFi today, there's, I mean, for us also, and for most of the projects, there's no sort of like KYC process for you to submit your individual's information. But there is a sort of like AML process where if your fund is coming from a sanctions or sort of like well-known like the hackers address, you will be blocked. Yeah.
Right.
What about the synthetic automated market maker? How does that work? And basically, like, how do you ensure, this might be a really simple question, naivety on my point, but just how do you ensure that the money exists? So, you know, if a lot of people are hitting these futures bets, for lack of a better term, that there's actually funds that they can be paid out.
Sure. Firstly, for the synthetic sort of model, we call it synthetics, although that's the truth is that we use your, say, dollar to help create what we call a long or short positions. As I just now mentioned, if you are saying that you're buying Apple in a week, it's a long, right? And if you are selling in a week, it's a short positions. So the fact is that there is, for derivatives, it is not that today you pay dollar and then you buy your Apple stock and you get the physical Apple stock in your accounts, right? For derivatives, since you are buying in a week, what we could do is also, let's say, settle in dollar, which means that if, say, the Apple stock raised by $1, then I pay $1. If it goes down by $1, then you pay me $1. So in that, you don't need to really hold the Apple stock, but just use your dollar to settle the difference. So that is what these synthetics come from. So if you love to lease, say, a pair of your microphone price versus dollar, I don't need to own your microphone. You just provide USDC, your dollar, USDC. Sorry, to be exact, USDC stablecoins. And we trade on the price of your microphone. And when you supply to us, we sort of like create a buy position or long positions of your microphone in our model, and definitely will hatch that. I wouldn't go into details of the model, but basically the whole model help you create such a positions for your microphone price versus USDC, and then manage the risk for you. So this is the whole part of synthetic. And then you could just settle the price difference in USDC rather than deliver me the microphone. So that's the synthetic ideas. And the second part, how do you ensure that you have sufficient funds in the accounts to deliver in a week, right? So that's the whole part of derivative management, risk management, and where the engineering complexity comes in. So we will closely monitor your what they call margin. So in order for you to buy, say, $1 billion worth of something, you need to post, say, like 100 million first. And then so with $100 million, you could trade up to 1 billion. So this is called a 10 times leverage. But with this $100 million as margins, I will closely watch the price difference and see whether the price has dropped to a certain point where your $100 million deposit is no longer sufficient to sort of trade this instrument. And then it comes into all those liquidation, etc. process. So basically, for you to trade any derivative, like if you are longing the position, you need to put on what they call a margin. Hopefully, that's I explained this clearly. But this is the whole set of derivative. But let me know if there's any questions. Yeah.
So I'm interested in, you brought up how with V3, your order book technology is sort of the first in the decentralized space. I'm sure there's a lot of complexity to it, but is there a simple way to maybe break down, why hasn't that come sooner? Why was it so difficult? And what advantages does that offer now that SynFutures sort of brings that to the market?
Sure. In other what we call semi-DeFi products, the order books already enabled by using an off-chain centralized server, which means that like if you place an orders and there will be a centralized server that's not on chain to help you with all those like order matching and transaction ordering and etc. So the it's so difficult to put it on chain because it requires lots of complicated computing. And currently the blockchain's infrastructure is not there yet. It's very hard to sort of like go through 1 million different transactions and see which one comes first and which order should match with the other orders. So the whole engine is very complicated and very hard to realize it on chain. So and our PhD's been working on this for a very long time. And then at last come up with the models that in fact have a little bit sacrifice with the sort of like fairness of the what we call order matching, but achieve a fully on-chain features. So most people wouldn't feel the difference, but we sort of like provide a liquidity to each order in a slightly different way than the traditional order book model and achieve the fully on-chain features. Yeah. And with this fully on-chain, I mean, like lots of exciting work could be building around it, right? Say we could, for orders like off-chain matching services, most of them have to still rely on a centralized service. So there's still backdoor out there where your order could go through. I mean, lots of different, as well FTX says, right? They have a backdoors and some people are favored, the others are not. And also like fully on-chain means that you're in one system. So you don't need to go through like on-chain, off-chain, on-chain, off-chain. And so it reduces the possibilities of it's like downtime and so simple. And best of all, definitely we could go anywhere to any chain and go into any ecosystems and trade any of your favorite assets in any different chains. So with this fully on-chain model, rather than some of the other, right now, derivative protocol, they have to have their own infrastructure. So it's very hard for them to move to anywhere else. Yeah.
In terms of SynFutures, where it's built, my understanding is it's built on Blast Layer 2, but there was an announcement that it's going to be coming to Base. What is the timeline for that?
Exactly July the 2nd. So we have already deployed. Yeah.
Perfect.
There is support for like lots of basis ecosystem like DGen, Lido supports as our launching partners. Yeah.
Why was the decision to come to Base as well?
Firstly, I think that we appreciate a lot the Blast ecosystem use is still our base for the our products. But Base is interesting. And the way in crypto we hope our product should be interesting as well. There's lots of like degens, meme coin, different assets, and there's this like social cultures out there that's that's very attractive to us, especially with our model, right? We want to go to base to bring derivative to base, because until today, base is still lacking sufficient derivative services out there. And might be because of its emphasis on social and all the other mean at the first place, without any incentives to any projects. And secondly, I mean, there are lots of degen traders out there as well. Our model is special in that it could power lots of different assets within 30 seconds. So we hope that anyone in base, they could lease any meme coins in spot, also in derivatives, and they could trade whatever assets they like. And we even invested into some young people who create gamify front ends, and when you trade, there's different music, and when you trade, there's different gaming for you to play. Yeah, just be more fun. Yeah.
Nice. Is base just the first in many expansions to different layer twos, or is this sort of on all you have on the horizon right now as far as that type of move goes?
Yes, base is the first expansions of layer 2, and we have other plans as well. But we do believe that we should work well in each and every chain and listen to different communities and users' feedback to improve our product. And before we move to the other chains and ecosystems.
You've mentioned FTX a couple times on this episode, and so I want to bring up an article that you wrote. This, I think, was last August, and it was interesting, right? The headline of the article is one that maybe initially people think as off-putting. You said, or at least the title of the article was "Why FTX Deserves a Second Chance," which seems like, what? FTX? No, they shouldn't get a second chance, but you kind of talked about how launching FTX 2.0 could be a good thing. Do you mind kind of breaking down the thesis of that article?
Sure. I can't remember exactly, but I think the major argument should be, number one, is more for the investors, be it retails or funds, because lots of I went through the whole cycles, and I know that lots of them are good projects and good users, and they just never thought about the possibility of FTX being collapsed so quickly, and then all those people who get their funds stuck there and get broke should deserve a second chance if the exchange could still recover. And there was precedence, because I was in the space earlier, so there was this big fitness right now to do the Tether's company, right, the holding, right, and they were hacked, and later on they issue an IOU credit to every users, and then they still try hard to do the business and use the profit to repay every users, and it turned out perfect, right? Because if not for all those improper management of client asset, the exchange itself was doing pretty well, making good profits, lot by lots of retail and funds, right? So that's beneficial for the users. And secondly, when I said that deserve a second chance, I'm not saying that I send to run this around this exchange, but it's similar in traditional finance. The whole management team should be fired, go to jail, and everything, but replaced with a more proper management team. And for those equity investors, I'm sorry if you invested in a loss. Then this you still bear the loss for all those miVestors, right? But the whole infrastructures that they set up is still nice and valuable, and maybe we should call it a restructure, in traditional terms, and it deserves restructures to be taken over by some other people who could probably manage the whole exchange. Yeah.
as we look towards the future, I mean, we're in an interesting spot in the crypto industry as far as the markets go, where we had this bull market takeoff earlier this year that sort of took a lot of people by surprise, and was probably due to the Bitcoin spot ETFs being approved. But now things have slowed down a bit. They've kind of been stagnant for a little while. Let's say we're going into a bull market, or even if we're not right this moment, regardless, what do the next few years look like as far as the trends that you think will really pop off as we get into that next bull cycle?
Sure. I think we're still in this bull cycle. And it's the sort of like, if you say, amidst the bull cycle. Very good indicator is that, have you heard lots of people who never buy crypto start to do so? From what I'm understanding is that there are still lots of people who never touch crypto stay on their door, haven't really entered the door. So this is not the peak of the cycle yet. And I would say the bull cycle sort of accelerated by the ETF approvals and the majors. Well, when I say major, I mean BTC and ETH, or those large pairs. They get lifted by the traditional finance funds, or those large institutions flying into ETFs. But there are still lots of other factors that haven't really come into play. Say, for example, the major loosenings of monetary policy, Fed, lower the rates, inject liquidities, and new sort of application drawing ordinary people to come into the crypto space. Like last round, you see DeFi, NFT, gaming, and all those applications started to place purse by drawing new users. And I would say that this is the second phase of bull cycle we have yet to observe. And I do expect it to come later this year with definitely, the Fed is predicting a sort of loosenings of the monetary policy, and the elections of US is coming normally good for the in the crypto industry as a whole, right? And more pension fund applying to have some of their asset allocated to Bitcoin ETF. So with all these factors, I believe that there will be a bull market cycles in the second half of this year. Yeah.
I agree with you. And so if you had to make kind of a bold prediction of what a major trend will be of, the second phase, right? We talked about things like NFTs really being a key onboarding piece in 2021. There's been all sorts of different stories and narratives over the year. If you had to make that prediction of what might be the story of this bull run, what do you think it could be?
In fact, I don't know. I have to honestly say, because in every round, there would be some application out there that you never predicted it could be so successful. Even have you tried Stefan before, a round to earn, right? And there are lots of doing something to earn model out there. And it was that DeFi is supplying liquidity to earn. Right, and then NFT, and then gaming play to earn. And there are so many different actions in the world available. It might be eating to earn. But what I know is that I've been in the industries, and the innovations just kept coming. And every day there's so many good projects to learn, and you'll never know which one will suddenly caught the attentions. Yeah. One part definitely, social seems to be something interesting to look at. Yeah.
100%.
But I don't know really.
Yeah, exactly. No, it'll be interesting. It'll be definitely interesting. Some people have talked about maybe AI, maybe that's a big integration this time. But it's fun. It's fun to sit on the sidelines and kind of see how it all develops, what brings people into the space for sure. It
that you AI, you are saying about the longer term just now mentioned, like, I do feel like AI is the major driver for the blockchain adoption. Reason being that, take a step back. When I was in like Fintech, we've been thinking about what is the use case of blockchain? Why it hasn't gone to the real life of traditional, say, like trade finance and everything, and then it proved completely wrong. It's so hard to convince a large organizations to adopt blockchain. And then after years, I finally realized maybe the answers of blockchain large-scale application does not lie in existing economics. Because it's always so hard to convince the large organization to do anything, right? And the opportunity, in fact, lies in the futures where the digital economy grows to such a phase where you no longer need a firm, right? A digital version of yourself, how you plan everything, and you do shoppings and go to music concerts and call a taxi everywhere. And then you need such types of currencies that is so open that enable you to pay anyone in the world immediately, and anyone could come and accept your currencies without any troublesome work, right? And then they could come and go. And then you could invent another currency, but cryptocurrency is already there. So when AI comes into I'm saying not only AI, but the digital economy powered by AI goes into the next phase, and the need for digital currencies will be immense. And that's when the large-scale application would happen. And that when you'll see everyone will be holding cryptocurrencies by then, yeah.
I love it. We're going to play this clip back in 10 years from now, and it's all going to play out the way you said it. And you're going to be a rock star, Rachel.
Yeah, I have strong convictions in that.
I love it. Rachel, this has been a great conversation. You've explained this in a really easy to understand way, everything regarding derivatives trading. Thank you for doing that. At the end of every interview, we like to ask our guests the same 3 questions. It's a little segment we call You Had Me at Crypto. So Ulf's going to ask you those questions.
All right.
You ready?
Sure. Take a breath.
All right. The first question, who's your favorite person to follow in the crypto space?
I enjoy reading Arthur Hayes, if you know the founders of BigMax and 100X. Yeah. He's an interesting guy. And he always, among all those interesting conversations, he has the thoughts and his very great insights into the crypto industries. Also, I never met him, but from what he wrote, I know that he have very good insight into even histories, societies, and they analyze the whole crypto industries from different angles. And I would recommend everyone to have read, even all those long blogs. Very interesting.
Nice. Love it. Second question, what will the price of Bitcoin be 10 years from today?
Okay. 10 years, so hard to say, but I think reasonably that will be above 500,000. If you look at gold's market cap is about 15 trillion today, and crypto's about 2 trillion. So 7-8 times of today. And also consider the fact that each central government will be printing money that is innate for the rest of the years. And then you could reasonably assume that Bitcoin could catch today's gold's market cap in 10 years, which is 7 times current price. Yeah.
I'm trying to do the math in my head. What's it? Just over 60 right now, so 330. Is that what
but then with the price inflation or devaluation,
there is inflation.
It's gonna go up more.
If you read all those Hayek and everything, right? So the central bank has this impulse to always print money. Yeah. And
So you're being modest at 500K.
yeah, even modest, there's a rule. If we print at 3%, it's like 69 divided by 3, 23, some 20 plus years, the world's currencies will be doubles in 20 more years, even if the inflation rate is 3%.
Wow.
So yeah.
All
That's
right.
one of the I'd say a lot of people just throw out a number, but like that is one of the most rational decisions. Like there's a lot of thought behind that answer. So I appreciate it.
All right. Third and final question. What's the most underrated project in the crypto space?
Other than SynFutures.
Okay, yeah, I was going to say SynFutures. And I do think that we could pay more attention to Blast. I think Blast is not having a very good FDV right now. It's only around 2 billion, while its peers like Arbitrum and OP's 8 to 10, right? And there are lots of complicated reasons on that, but I do believe that it has the potentials. Yeah.
Good answers. Rachel, this has been a fun conversation. Thank you so much for joining Ulf and I on this episode of Show Me the Crypto.
Thank you again for having me here. Pleasure talking to you.
Thank you for listening to Show Me the Crypto. Please make sure to subscribe as well as rate and review this podcast.